I'll try and go through this in about 30 minutes. It's a tall order. I'll try my best. We've tried to keep this to very high level, and the people on this call have been deliberately invited to attend. This is not open to the general public because it's targeted at business leaders. We will then have subsequent sessions for other stakeholders with more detailed analysis. So the conversation is around the Petroleum Industry Act, redefining the oil and gas landscape. So, Nigeria has the largest proven crude oil reserve in Africa, and also even a lot of gas. In fact, many people say that Nigeria is a gas country with some oil, and not the other way around. We have been struggling with particularly forex liquidity, even though the energy or the oil and gas sector accounts for less than 10% of Nigeria's GDP. It tends to be the determining factor as to where the value of Naira goes, because it accounts for over 85% of our foreign exchange earning and 65 or more of federal government revenue. So whenever that sector sneezes, the economy catches cold. So because we've had dollar scarcity, we've seen that impact on the value of the Naira, and then by implication on everything else. Government debt is rising for simple reasons that revenue is not enough while cost is increasing, and the cost of servicing debt continues to balloon. At some point, I think Q1 of this year, we spent like over 90% of government revenue just to service debt. And the finance minister has been very blunt and honest with us to say, by the way, we will continue to borrow because we don't have any immediate options. Our inflation rate is high, so is unemployment rate. Some reports yesterday said Nigeria is now the most miserable country in Africa. I'm sure if you try to look at the whole world, we'll probably be in the bottom 10. So there's lack of opportunity for people, especially the youth, and this is fueling insecurity, brain drain, and skill shortage. We have economic distortion around fuel subsidy under recovery is sometimes what we call it because it's not been budgeted for. And then we have unstable electricity supply. So the capital market is struggling. People are getting negative real returns on their investments. But then, some not too bad news is the fact that the outlook for the price of crude oil is fairly stable despite the COVID-19 uncertainties. We're beginning to see some level of confidence building. According to the Stanbic IBTC PMI report for July, there was an improvement to 55.4. This is really what purchasing manufacturing companies and people in business, if you get more than 50, then that means the outlook is positive. Then we had investment announcements of over $8 billion as at March 2021, according to the NIPC. About 5.5 billion of that is from foreign investors. So the common denominator to all of this conversation about the economy is the fact that the oil and gas sector drives all of this. So if the price of crude oil today goes to 80, 90, and we can do 2 million barrels per day, everything changes. Every single thing there changes immediately. But I think the point also is how can we move the economy away from this over-dependence on the petroleum sector such that wherever it goes, we tend to follow it almost without any alternatives. So now moving on to the main conversation, in terms of the Petroleum Industry Act. So just to do a quick, recap of the journey we've gone through. So we know the law was signed eventually Monday, August 16, 2021. Less than, I think just about 10 days ago. And this law seeks to provide legal framework, governance, regulatory, fiscal, and more transparency for the petroleum industry. It's a very huge piece of legislation. It has 5 chapters, 319 sections, and it contains 8 schedules. The timeline is this has been about 2 decades in the making, and I'll say stalled by politics. So the major issues holding back the PIB has been politics. In fact, not even anywhere close to issues to do with the fiscals, where you imagine that the players don't want to lose out. But it turns out it was really politics that didn't allow this to happen. So you can trace the journey back to the 2000 Oil and Gas Implementation Committee set up by the former president, Olusegun Obasanjo. But I think the bill was eventually presented around 2012, 2013, because the one that was sent in 2008 was when we had the first one at the time, but was for the 6th Assembly. So there was a lot of back and forth. At a point, even the members of the National Assembly had different versions. So there are different versions at the House, different versions at the Senate, and they're not the same. So all the way to 2017, when the National Assembly decided that maybe if we split this into different components, we can then pass the ones that are not as controversial. So that led at the time to the Petroleum Industry Governance Bill, which was actually passed, but wasn't assented to by the president. And then what then happened was at some of those intervening periods, the bills were sponsored by the lawmakers as a private member bill. I think it's a bill that is too important for it to be sponsored by an individual lawmaker. So that was one of the things that happened separately or differently. By 2020, the bill re-emerged as a single one, this time around sponsored by the executive. And eventually it was passed and signed into law. So it's been long overdue, but it's here. And I know people are happy. Sometimes I don't know how to feel myself, but they say better late than never. So we'll look at some of the key provisions of the law. So let's start with, remember we said there are 5 chapters of the law: governance and institution, administration, host communities, development, the fiscal framework, and miscellaneous provisions. So let's start with governance and institutions. So the objective of this chapter and the whole intention of the law is to ensure good governance. We want to try and create a conducive environment for petroleum operation, and you won't have that if you have hostility and you have unclear regulatory environment. We had a challenge that an operator was also the regulator. NNPC was an operator. I was a player in the industry, was also the regulator. Just imagine NCC also selling us, telecommunication. So this law has now established a regulatory authority, actually 2 of them, the Commission for Upstream and the Authority for Midstream and Downstream. The powers of the minister has been moderated. Let me say moderated. I think that's the right word to use. The minister no longer has the singular authority to do and undo, including awarding licenses. So a lot of those functions now rest with the commission or the authority, as the case may be. This a big provision of the law is to incorporate a commercial and profit-focused NNPC to be known as NNPC Limited. So NNPC Limited is going to be doing business like everybody else. And so just imagine Saudi Aramco, so commercially focused and just doing everything like the private sector. But it's going to be, so it's important to clarify that NNPC, within 6 months of passing this law, enacting it, has to be registered with the CAC as a CAMA company. Even though it's going to be commercialized, it's not being privatized as of yet because it's still going to be owned by the Finance Ministry Incorporated and the Ministry of Petroleum Incorporated on behalf of the Federation. So it's still pretty much a public sector organization. The new NNPC Limited, will take over assets, interests, and liabilities of NNPC, and whatever it cannot take over would stay with NNPC until such liabilities are extinguished or those assets are transferred to the government. And then NNPC will cease to exist as it is known today. Would then only have NNPC Limited going forward. Now, if you want to transfer the shares of NNPC Limited, you will need the approval of the federal government and the endorsement of the National Economic Council. There has been a lot of conversation in the public space, including by the Governors Forum, saying, why is it that it's federal government, ministries that are the shareholders of NNPC? Why not the NSIA, for example? I think the counterbalancing provision in this law is the fact that the shares cannot be transferred without the approval of NEC, and NEC is made up of all the governors, of course, plus the VP, ministers, and a few other people. This is meant to, the creation of NNPC under KAMA is meant to pave the way eventually for the transfer of the shares of NNPC to Nigerians. So one day NNPC will be listed on the stock market and Nigerians can be proud shareholders of NNPC Limited, by which time it will become a PLC. NNPC, because it's now commercially focused, will earn management fee. The management fee will be 10% of the proceed from sale of profit oil and profit gas. And 30% of that profit oil and profit gas will be remitted for Frontier Exploration Fund. This is the one that has also been very political. People think it's to do with the North. But the Frontier Exploration Basin cuts across Nigeria, including in Anambra. And then there's also a 10% of rent to do with PPLs and PMLs that would also go into this Frontier Exploration Fund. The idea is to try and see how Nigeria can invest to enhance our proven reserve of about 35 billion barrels, so we can have more reserve. But the politics aspect of it is people are saying 30% is too much, and they think it's money for the boys. And the other aspect of it is people are not comparing the basis. They just think 30% is a lot without looking at the basis. So this is not 30% of, the way it works is for the interest that will be held by NNPC Limited. So you have your, once you have your oil, you're going to take your cost. Cost oil will be taken out. You take royalty oil will be taken out. And then you take your, tax oil. So because there's also hydrocarbon tax and CIT, and then whatever is left is your profit oil. That's really what they're talking about. And that you get 30% of it. In a bad year or when the price of crude oil is low, you expect that there won't be profits. So administration, the chapter 2 of the law essentially focuses on administration, licensing regime, and so on and so forth. The core objective is to promote the exploration and exploitation of petroleum resources in Nigeria, of course, for the benefit of the Nigerian people, and ensure that we're able to do this safely and in a way that is efficient, including improving the infrastructure within the industry for transportation and distribution in particular, especially for gas. We also want to have transparency and accountability. Nobody should get licenses under the table. The term should be open and clear to everyone. All animals should be treated equally, and the playing field should be leveled as much as possible. So this chapter requires that nobody can now operate within a single entity more than one stream. So we now have 3 streams. You have the upstream, the midstream, and the downstream. you cannot combine two streams, for example. So you have to create separate streams because we want to have clarity of administration and regulation. I think the only exception is maybe for gas, where you can combine the mid and downstream. There's also the relinquishment where your acreage, you have to then identify about 40% that you want to retain, and then you must relinquish about 60% that's left. There's a provision in terms of the fiscal regime that says you don't all have to move to the PIA if you already have your existing licenses and leases. You have the choice to continue under the existing fiscal regime. Of course, you don't have any choice as to the governance. But of course, in terms of the fiscal regime, you can continue with what we have before the PIA, or you could convert within 18 months. Should you fail to convert within 18 months, you will run the life of the lease. Once your lease or license is due for renewal, you have no choice but to move to the PIA. For the existing joint venture arrangement, there will be the opportunity to incorporate them as incorporated joint ventures, in which case the NNPC and the industry players will have shares in the IJVs. The IJVs will be able to operate like any company, and therefore they'll be able to raise finance should they want without having to wait for cash calls from government, which has been a major problem over the past decades. So this provision also ensures that we avoid economic distortions, including subsidies. So the intention is to get away and do away with subsidies and even price regulation, including the price of gas. I have to say, though, that at the initial stage and also at infancy, the provision of this law requires that government regulate prices. We're hoping that will not be something that will be with us for many years, because as long as we continue to regulate prices, it will make investment difficult. And once you don't have investment, you don't have the results that you're looking for. The Commission is required to develop a model that ensures that the NNPC is able to participate up to 60% in a contract, essentially making sure that Nigeria does not lose control of those contracts. Host community, the most talked about provisions of the law. So this provision is to ensure that we foster prosperity, harmonious coexistence with the host communities. And we know so well the issues with the host community. I myself am from the Niger Delta, and even though I wouldn't claim that I've been affected like many people who live and work there. But the reality is that it's been, a bad story, unfortunately. I would have thought that by now, that region should be our mini Dubai in Nigeria, but it's not the case. So this law has been intentional in requesting that actually requiring that licensees or an operating company in the case of a JV should be a set law to set up a fund, and that fund is the host community trust fund. Into that fund, we should pay 3% of actual operating expenditure of the immediate year. So for 2021, you will do your OPEX for 2020. And by estimation, this industry had about $16 billion of operating expenses, and that includes the depreciation of their assets as of last year. So if you calculate 3% of that, that's very close to $500 million. So the 3% is calculated on a base that is very different from the base for calculating the 30% for frontier exploration. We also need to bear in mind, because initially when the conversation around around PIB started, the request was even for the host communities to have shares in the oil companies. What that means is the host communities will have to raise the fund to buy the shares. And as a shareholder, you're not guaranteed of anything. But in the case of operating expenses, even when you're making losses, you have operating expenses. Many of these companies as well, before they start producing, they spend years spending a lot of money without a single turnover. So if you were taking a percentage of profit for those years, the host community will get nothing. Whereas for operating expenditure, you always are guaranteed of getting something. So of course, the fund is exempted from tax, and there's a board of trustee as well as an executive management team. And then the host community will have the opportunity of a representative in the management committee. But interestingly, people that will be on the board of trustee and even the management committee don't have to come from the host community. They can be professionals from other places with the right skills to make sure that the fund is properly utilized. The law requires that 75% of the fund should be used for capital projects, 20% is savings for the future, and 5% for administrative expenses. Should there be vandalism of the infrastructure of an oil company within the host community, then the cost of fixing it will be deducted from the amount of contribution into the fund. The idea here is don't spoil our infrastructure and don't allow other people to do so. So we're now co-owners of those infrastructures because we benefit from it not being vandalized. The fiscal framework, this is a lot. This in itself can take hours, but just to summarize, the fiscal framework now is clearer. Most times, what the investing community is asking for is not to pay tax. No, they want to pay tax, but they want to have clarity and certainties as to what taxes they need to pay. So this, clarity in itself reduces risk. Government wants to enhance revenue, which is understandable. Let's get more from our God-endowed resources. But we also want to ensure that there's fair returns for investors. Otherwise, investors would not come. Venezuela has the largest proven reserve in the world, over 300 billion barrels, almost 10 times what Nigeria has. But people are not investing there. Why? Because the environment is not conducive. So we always have to remind ourselves that it's not sufficient to say you're endowed with resources. If you cannot bring crude oil out of the ground, it's completely useless. So this law now introduces a new tax called hydrocarbon tax. And then we no longer have PPT. So you have hydrocarbon tax and companies income tax. Hydrocarbon tax ranges from 15 to 30%, of course, depending on whether it's frontier, whether it's deep offshore. Then education tax used to be tax deductible for a petroleum company is no longer the case. And there will be royalty payment now to be collected by the commission. Gas flaring penalty will be collected by the authority. If you are late in filing your returns, you pay a penalty of 10 million naira on the first day, and every other day you pay. Every day that the default continues, you pay 2 million naira. So this is heavy, actually. I just feel for the small operators, everybody needs to be careful now in this industry. If there's an offense for which no penalty has been prescribed, you pay a fine of 20 million naira. For you to get your tax deduction, the expenses must be wholly incurred, must be reasonable, it must be exclusive, and it must be necessary. We didn't used to have reasonability as a condition before until the PIA. It means that not only should you spend money, I need to assess whether your money you have spent is reasonable. For example, you can provide entertainment for visitors, or maybe somebody will fly and say, why did you take a private jet when you could have taken first class or business class? I can now say that the expenses for a private jet is not reasonable, even though it was for the business, and therefore it may be disallowed. This law says the amount you can deduct as expense in total must not exceed 65% of your revenue. So if you have a low crude oil price regime, which means that cost is almost equal to revenue, then the oil companies will have to still pay minimum tax. This is essentially a minimum tax because you cannot deduct all your expenses. You may be able to carry forward some of the expenses to future period, but the same rule of 65% cap will still apply. Should you borrow, before you can get a deduction for your interest, you must satisfy the commission that this money was used for business purposes and that the interest rate reflects market conditions. Royalty rates will now range somewhere between 12.5 for shallow water, 7.5 for deep offshore, And for frontier basin, is also 7.5. For natural gas, it's 2.5 to 5%. There's a new introduction of a price-based royalty, which means if prices are going up, then you pay the royalty. If price is low, you don't pay the royalty. Of course, there are two royalties. It's not like you don't pay royalty at all. One is based on production, one is based on price. The price-based royalty should be remitted to the sovereign Nigerian Sovereign Investment Authority for investment for the future of Nigeria. I like this idea. Actually, I wish we could, allocate more to the NSIA for future investment. And then there's gas utilization incentive that would apply, including an additional 5-year tax holiday for investment in gas pipelines. So there's already a 5-year tax holiday in the law. An additional 5 years has now been added, which means if you invest in gas pipeline, you can get 10 years tax holiday during which you do not pay income taxes. So finally, miscellaneous provisions contains repeals. Certain laws have been repealed, some have been amended, and there's what we call savings provisions, which means even though we have a new law, would allow you to operate under these old laws for some time before we repeal them completely. And some of the arrangements we had before the PIA will continue even though we have a new law. So those are the savings and grandfathering provisions. So we have 8 schedules, as you would see there, including those dealing with incorporated JVs, right of preemption, domestic gas-based pricing framework, and the pricing of gas as well, capital allowances, and the cost price ratio limits, fees, royalty, and the creation of Ministry of Petroleum Incorporated for the sake of holding the shares of NNPC. So what are the implications and what should you be doing about this? So I just thought to summarize this on a slide. So there will be the economic implications and it will be significant. The improved governance should help us create an NNPC we can all be proud of. If you compare that to Saudi Aramco, just 3 months this year, I think was either Q1 or Q2, reported a profit of over $25 billion. This is after they paid taxes and royalty. So profit alone, that's the size of the revenue we're hoping to generate federal government and actually federally collected revenue for this year is under that amount. So monetary and fiscal implication means that if we're able to run this sector well and we earn foreign exchange and we stop importing refined product, then Naira will strengthen. Or even if it doesn't, again, many times people are too fixated about the rate of exchange of Naira to other foreign currency. I think that what is more important is the stability of the rate. So even if your rate is 500 and it's stable, what that means is I can invest in dollars, bring my dollars, invest, and I don't have to worry about losing half of my money in just 1 year due to exchange and devaluation. Subsidy regime likely to go. Actually, it will go. It's just a question of when and not if. And once we have more stability in the economy, Naira is stable, and then fiscal implication would also be more positive. Government will borrow less. Cost of servicing debt would also decline. We expect that hostility should be a thing of the past once we start seeing development in the region, and this should help with insecurity across the country. In terms of business impact, we see a lot of implication for the banking and other financial services. You need to now go back and reevaluate your contract and the arrangement you have, including investing opportunities and funding that have been provided. A lot of funds have been established under the PIA that need to be externally managed, including the host community fund, as well as the environmental degradation or abandonment funds that now needs to be managed. Insurance opportunities opened up significantly, as well as they'll be reporting valuation and corporate transactions. So reporting implications would even be that, take something like deferred tax. Deferred tax should be calculated based on the rate that has been enacted or substantially enacted. So the rate of taxes for the sector is suddenly different, which means all the assets that you have, you now have to go back and reevaluate whether your valuation is too much, whether it is too little. And bear in mind that this is not just about the headline rate, it's also about the effective tax rate. We expect that there will be a lot of corporate transactions in the form of M&A because, one, this law even says that you can't operate more than one stream within one entity. So which means people who had upstream and downstream and midstream together, we have to create separate entities and move things around. What's the future of energy? So there's an impact for that, not a lot in the PIA for the future of energy, but we know that the conversation is moving towards issues around renewable, hydro, wind, and so on and so forth. And there's the issue around ESG, such that even the likes of the World Bank have now said we will no longer fund investment in fossil fuel because the world is moving to clean energy. Don't rule out the possibility of a carbon tax being introduced in Nigeria to help us achieve our net zero commitment. So Nigeria, along with ECOWAS, has a commitment of 2025, actually, which is very close. Even though I have to say, honestly, I do not think that Nigeria is very well committed to this. But there's a push from the rest of the world such that we really don't have a choice and not many options. The general implication would include impact on everyday Nigerians. If you remove subsidy, it will immediately have an impact on transportation and everything else. But over the medium to long term, that should be a positive thing for the economy. Human capital development, we expect that electricity will be stable because if you have gas and you solve those problems, of course, I'm not saying that gas is the only problem we have for electricity generation, but it is a huge part to be able to give us energy security. So your next step is you need to first understand, read the law if you can, it's a lot, read in between the lines because sometimes what you need to figure out is not clearly stated. Make sense of the changes, try and build capacity within your team to understand it and then join the conversation and assess the impact. How will this affect you? Do you have contracts you should go back and review? Do you need to restructure them? Are there things you need to reconsider? Imagine a bank granting a loan secured on an asset, and the asset is now an asset that is being used for mid and upstream. You have to split mid and upstream, midstream and upstream. Where do you put the asset? How does that affect the covenants on those loans? Then develop your strategic response. What is it that you want, by when, and so what? So what is the outcome you're expecting? You ultimately want to minimize your risk and exposure while optimizing the opportunities that are available through strategic positioning. Don't wait until everybody has taken all the opportunities that are available before you start showing up. You need to plan for fast execution because you're not the only one trying to look for opportunities, and you need to engage and monitor as things develop in this sector. So I'll try and wrap up now by sharing briefly with you the insight from our survey. So we asked different organizations and then, different people from business leaders to CEOs and executive directors across different sectors. Biggest response we got is from the oil and gas sector, which is not surprising because the highest interest is also in that sector. Even though I think there's so many other sectors that are not aware that this affects them, they think it's a conversation for the oil and gas sector guys. So we asked this question about what are the top 3 changes you are most excited about? And these are the top 3. Number 1 is the fact that we're creating a commercial and profit-focused NMPC. Number 2 excitement is the fact that we want to deregulate downstream and remove subsidy. I don't know whether this survey is influenced by the fact that people who responded are business leaders who have better awareness. I don't know whether if you conduct this survey to the average Nigerian, whether they will want you to remove subsidy. Then number 3 is the creation of a regulatory commission and authority. I think nobody was happy with the fact that NMPC became the all-in-all, doing whatever was needed in terms of regulation as well as operating at the same time. In terms of the changes that people most disagree with, the number 1 is allocation of 30% profit for frontier exploration. I don't know whether the session we've had today will change your mind. I'm not particularly concerned about it personally. And number two is the 3% of operating expenses for host community. People think it should be higher than that. I think it's a good starting point. We have the 3% for the host community. There's 3% for NDDC. We've always had a 13% derivation for states in the region. We have the local content levy of 1%. Again, by extension, local content is supposed to help us develop human capacity, but we are fixated on physical infrastructure like road. Nobody is even asking questions about, are we developing our people? Should we not get to a point where people indigenous from those communities have the skills to be employees in those oil companies? And number three, people most disagree with is the ownership of NNPC. Like I said, by Ministry of Finance and Ministry of Petroleum Incorporated. So we ask people, how do they think that this will impact their businesses? To the left is no impact, to the right is great impact, and you see majority are in the middle. They're not very sure whether it will have a significant impact or not. And overall, we ask whether you support the Petroleum Industry Act, and government gets a thumbs up with an overwhelming 96.4% are in support and about 3.6%, so that's supposed to be 3.6% are against. And the ayes have it. On that note, thank you very much for paying attention to me.